Man, this lunch is so good. I hope no one will come back and ask me any questions because I clearly gave them the setup on Discord. So why come back to me? Is this right here? Mm. Yo, Index Queen, can I ask you a question? Before I He still ain't paying attention. Mm. So what you gonna do when you see that? Told him to watch the video. How many confirmations did you have though? Zero. Why are you looking at me like that? What's wrong with you? Oh God. The setup was 300 points. I don't understand. See, you missed episode 1, didn't you? Still not watching the videos and I'm posting. Now you tell me about a setup he took from me last week? Okay. So what you gonna do next time? He need to listen to me. Golly. At this point, I'm trying to eat. I'm over it. Ooh, thank you, Lord. Start my series, episode 5. Whole lot of blessed over, yeah, you know that a whole lot of who want desire, cause you know that I do got it. Whole lot of D on me, I walk in, I'm a showstop. Whole lot of haircuts, a new shop. Whole lot of poppers, a new shop. Whole lot of it being impact. So, welcome back to another episode. It's been a while, no lie. It's definitely been a while, but I'm back. I hope y'all watched episodes 1 through 4. Y'all been profitable. Y'all had it on repeat and some more. But you know what? We're going to get back into it because I'm back. You know what I'm saying? So we're going to keep making profit because I gave y'all some good setups on the other episode. So now we're going to get really into it. We're going to complicate things a little bit, but not too much. Just make it more so you guys can make more money and have an opportunity to see even more setups. So let's go. Market maker number 5, we're going to go over system components, 3-day cycles. The good thing about the 3-day cycles is, if y'all noticed, the indices have been in a downtrend, of course, and it's been in cycles. So this is perfect. This was just meant for me to tap in at this moment. So the top 3 things that you need to be concerned about when it comes to making profit and just in general knowing how to look for a setup is your simple patterns, basic candlestick patterns as well. I gave y'all super basic ones in the past episodes. Those are double tops, double bottoms, right in the second leg of a double top M, right in the second leg of a double bottom W. Super basic, easy setup for a beginner. But these are other things you can look up that I have, which is hammers, railroad spike to the highs and lows, outside bars. Okay, those, it's nothing that you haven't really seen before, right? All simple stuff that you've seen in the market. This stuff been around since the 1600s. Y'all should know this. I'm gonna need y'all to read y'all history when they were trading rice. So candlesticks been around for a while, right? So you're gonna pay attention to the high of the day and the low of the day. That's important. Pivots and levels. Again, we talked about in the past the ADR, which is that average daily range. talk about that. It's a 15-day range average to record the pair's behavior. So that's very important. We talked about also in the past watching your favorite pairs, the behavior of them. All right. So we're going to also talk about how to identify the trend. Okay. The two types of trends. The market maker trend, which is the real trend. Then we have the technical trend, which is the retailer. The market maker will perpetrate, it will send those signals in the market to get people jammed up. It is what it is. They purposely send those signals in the market, okay? Just dirty, but it is what it is, you know? So levels are visible on all time frames, but some more than others, right? We have the trend, right? The trend is set by the market maker and can be reversed at any time. Anytime the market can be reversed, all right? That can be more than one on day one. It also could be the level one rise back into consolidation. So you want to pay attention to that. Understanding this gives you an advantage and allows you to trade both ways. Okay, taking the sell, taking the buy. You know what I'm saying? Yeah, we've been in a bearish market, but there have been buys. There was one, I think like 2 days ago, that I actually called in a Discord. Matter of fact, before the bell even opened, before New York opened, it was a triple bottom, and I called it, and it was 300 points. And eventually, throughout the day, it kept rising to get to the sell, which I was also in, which I did show my position in Discord. I was in at 313 for the big sell-off that happened that day and continued to happen. Yeah, your girl probably won't be trading tomorrow. But yeah, so you want to be able to take advantage of that. I'm not saying you have to do the most. You can honestly get in 300, get in 200 points, get in pips, get in 100 pips. Like, that's solid. You know, stay consistent with that. Don't overtrade or whatever. But I try to catch my setups, and I had that marked up. That also was in Discord. My chart was marked up for the sell and the bottom. I had the trend line on a 4-hour. So that was my setup. So that's why I took it. So I did take advantage of that. I want you to as well, so you don't miss the setup, okay? Being biased. You don't want to do that. You understand? All right? So regardless of the news, the market maker has to hit its target, period. Identifying a trend is generally set up as a 3-day cycle. So you see here we have the downtrend, we have consolidation, you have level 1 and level 2. So you clearly see how I marked out the 3-day cycle. You will always see level 1 rise or low, consolidation, and it will continue to move that. You'll see consolidation for the level 3. So you'll have, like I said, level 1 consolidation, a drop or a rise. That will be level 2 consolidation, drop or a rise, consolidation, level 3. So this is just an example of how it usually looks for the first level, and then the second level will present. So this is a downtrend. So this is the example of the downtrend, right? So we'll just stick to that. So day 1 reversal, may peak formation high and low. The second leg W, second leg M form, basic setup that I've been telling y'all about. Okay, you can catch those in between the levels, or at the time of maybe a reversal may come, right? Sometimes news can give a false trend. We know that regardless of the news, the money market has to hit its target. We talked about that, okay? So don't be surprised. Don't be surprised, okay? Because it's going to come. The market going to surprise you, but it's going to come. Trend day 2, all right? So the higher time frames can give a signal, right? So the retail trader will wait for confirmation to enter, waiting for the MACDs, all them IML confirmations that force you to lose money. But we're not doing that over here. at all, because that's not what I'm teaching y'all. So we just not doing that. So if you've been with IML, get all that shit out your system. Get all that, because you don't need that. All right, we're gonna keep it real simple over here. All right, the market maker will force the hand of retail traders to get funds. They will execute a move to force retail traders to get in. They'll just send signals to throw you off, right? But if you stick to your plan, you stick to the things that I taught you, or if you do have a strategy that is working for you, you want to stick to that. Don't go outside of that. You don't want to get jammed up with the retail traders, because they will fire a signal to create a false move. All right, so you definitely want to keep that in mind. All right, so trend day 3. Traders are convinced this is a real trend. By day 3, we're consistently building lower lows, we're consistently printing lower lows, knocking out buy blocks. Okay. So like I said, day 1 is P formation. The high is usually the end of the trend cycle. So it'll reach to the higher time frame. That's when you see those M's and W's. That's why M's and W's is so easy to trade, y'all. Y'all really can just, usually you will see that as a reversal. You will see a double M because we've already tapped resistance once. We'll go back up, we'll tap resistance second time, or then you may get that triple top. But those, to me, they happen at those reversal moves. Like, that seems like the patterns that you will always see when it's time for a reversal. So start paying attention to your favorite pair and seeing for the reversals that's given like 200 points, 300 or more. What fired off? Like, what candlestick pattern did you see that fired that off? Pay attention to that. All right. Events that this is the real trend by day 3. So if you see pins, usually you're at that level of day 3. If you start seeing those spikes, if you start seeing those railroad tracks, usually those are signs that that's day 3. The reversal is issued for market maker to book a profit. Price is usually rising, right? Everyone is in a long, for example. The broker has a net short, this spike, right? That you'll see before the reversal and it hits the stop. Profit from the traders. The spike induces traders to take the long positions. More money in a broker's pocket, because that spike, it's a false move, and it's just to hit stop losses. So you have to be mindful. We already talked about spikes. So at this point, like, really, y'all should know what's up with the spikes. Y'all should already know. Don't be fooled by the spikes. Don't be fooled. It's just an institutional move, period. So here you see the reversal at a pivot point. So we have an example here of a spike, right? That may induce traders, it's going to continue to buy up. All you retail traders that don't want to miss the move, can't wait for a setup, think they have to trade every single day. This is y'all type of move. And guess what happened? You get jammed up, because look what happened. Look at all those red candles. It goes short. But we've been talking about the spikes. So at this point, why are you getting jammed up? Why are you still trying to catch a move that's already moved 300 points, 600 points? Also, you need to know, if a position has given off 300, 600 points, bruh, like, you got to pay attention. Don't try to be catching a move when the trend already moved 300, 600 points. Why do that? You already missed a move. So you either need to wait for another setup, come back later on in London, or just start fresh tomorrow. There's always money to be made in the market. So don't feel like, oh my God, I missed a move, let me jump in. I'm telling you, if you just wait, it's happened so many times where I might have missed a 200 pin move because either I got to the market too late or I wasn't paying attention, just anything like that, or I just didn't shoot the ball. But I'm telling you, it's been time that I waited for another setup. It's like, all right, missed the first setup, let me see where my second setup at. Got bread, we good, goal made for today. So why are we still trying to jump in to something that's already happened? We're gonna stop that. We can't be doing that. On that note, that is the end of this slide. I hope you enjoyed. I wanted to get straight to the point because I know it just can be a lot trying to learn how to trade and all this other stuff. So hopefully y'all gather everything y'all needed out of here. I'm going to see you on the next episode. And much love, peace, enjoy. Don't forget to like, comment, subscribe, and share because we about to keep going up. Periods. I loves.